Coming up on Leading the Charge.
Understand that United Rentals has acquired, last time I did a count, it was over 275 rental companies. And in some years, in the early years, they were buying several rental companies each month. So nobody in the rental industry is as good at acquiring and integrating, getting the software and the systems to talk to each other, getting the controls right. It takes a lot of controls to manage a rental business that's got over 1,700 depots.
This is Leading the Charge, where we talk innovation and insights in the industry of sustainable energy. Leading the Charge is brought to you by POWR2, a global provider of energy storage solutions. Let's simplify sustainability. And now, from the POWR2 studio and broadcasting everywhere from leadingthecharge.io, here are your hosts, Tim Doling and Kevin Sturmer. Welcome to Season 2 of Leading the Charge, where we talk battery energy storage, insights, innovation, and the industry of sustainable energy. My name is Kevin, and I work in the marketing department of a company called POWR2, and with us is the incredible Tim Doling. He is not only a co-founder of POWR2, he is the vice president of global markets. Tim, how are you doing?
Doing well, Kevin. Welcome to 2025, and we're pleased to keep going with Leading the Charge.
Yeah, excited for that. And a significant conversation today. United Rentals has acquired H&E Rentals. Now, for those not familiar, H&E was ranked top 5 here in the U.S. last year in terms of rental companies. And this is a rather significant announcement that's been made. It was a $4.8 billion merger. It expands the United Rentals fleet by about 64,000 units. The footprint of the branches across the U.S., about 30 states, including 2 new facilities that have just opened up recently. So a significant shift, let's say, in the rental industry. Fortunately, we have not only Tim, who has quite a career in the rental industry. He's seen mergers like this before. We also have Jeff Eisenberg from Claremont Consulting with us, who spent most of his career as well in the rental industry with a specific focus on energy as well. Hi, Jeff. How are you doing?
Good. Thanks for having me.
It is great to have you here. I really want to get to Tim first. Tim had some initial reactions to this acquisition. So Tim, what were your thoughts when you heard about this?
Yeah, it's interesting, Kevin. We like to watch the industry and like to see the movements with mergers and acquisitions. And this one, I think, is significant, being that it's really United Rentals' first major acquisition since 2022 when they took over Ahern. So Ahern was not quite the same scale. I think they had about 106 rental branches, whereas this one coming in now is going to be 160 rental branches, so it's a lot larger. But as United Rentals grows, the scale is just incredible. So I'll let Jeff speak to it, but we can look back to maybe 2011 where the RSC merger happened. And that was when, the number 1, United Rentals, took over the number 2, RSC Rentals, in this space. And United Rentals at the time had 540 branches. RSC had 450 branches. So it's like doubling the company in a very short space of time. So now United Rentals is 1,500 branches, and they're taking on a company that has 160 branches. The scale is just so much different. But it's still, nevertheless, it's just a huge movement in our industry. And I'm glad that Jeff's on board here today because he's had so much more experience in the M&A space. So I'd love to hear his perspective on it as well.
Well, thanks for having me. I think it's interesting that United Rentals is doing this, but it is part of their core business. It was originally formed as a company to acquire and put together rental companies. One of the founders, Brad Jacobs, United Waste Systems, Inc., that's where he came from. It was a company that put together a lot of things in the waste industry. So it's consistent with their history. Grow the core is one of the things that United Rentals talks about to their shareholders. It talks and in investor meetings, and they're good at it. So there's a critical mass argument in rental. If you get up to a certain size, it's easier. You've got more power to negotiate with suppliers. You have branches everywhere. You can move equipment east, west, north, south, follow the work. So United Rentals is also traded on the stock exchange, has been since something like a year or so after it formed in the late 90s. So it has access to the capital markets, although Head & Enquist was also traded on the stock exchange. So every time United in good times buys a good rental company, or even if it's expensive, United Rentals can make the synergies work. They can make cost savings, but maybe even more importantly, they can make synergies on the revenue side. They can sell things from their catalog to customers that were former Head and Enquist customers that are now going to buy other things that United has to sell.
And I think that's a really important point, and that's where I think it really applies to our business here, Kevin, is because H&E is typically regarded as a general rental store, so they had aerial and they had general tools. United Rentals wants to come in and bring their specialty product offering, whether that be pump, power, trench, that type of thing, and offer it to H&E's general rental customers, and therefore offering a new range of products to an existing customer base. And by doing that, they can grow their overall share. Would you agree with that, Jeff?
Absolutely. And United Rentals, they are effective at doing that. Now, unlike many rental companies, when United acquires another company, they will tell the analysts, they'll tell the stock market exactly what they're doing. They will make a commitment to a specific synergy level. And then they will go back to the stock market and they will answer questions about whether or not they made it. So they are good at doing that. Understand that United Rentals has acquired, last time I did a count, it was over 275 rental companies. And in some years, in the early years, they were buying several rental companies each month. So nobody in the rental industry is as good at acquiring and integrating, getting the software and the systems to talk to each other, getting the controls right. It takes a lot of controls to manage a rental business that's got over 1,700 depots.
Correct. So where does that leave the general rental company, like the independents? Like, is there a pathway forward for them, or is it ultimately going to be managed by the bigger players?
Well, understand that the United Rentals, I think they said that this acquisition takes their market share in the United States or in North America from something like 15% to something like 17%. So still, and number two is kind of far behind. So it's still a very fragmented industry. So it's never going to be the case that United buys half the industry. I think it just won't happen. And the other thing that happens is that United Rentals and the other acquirers, the other consolidators, when they buy rental companies, sometimes these people, the entrepreneurs that sell their businesses, wait till the non-competes expire, 3 years, 5 years, and then they come back. We call them the rental returners. And they successfully start up again, and this time they've got more money to do it. So that's a successful strategy. There are people that have done that 2, even 3 cycles of build a rental company, sell to one of the big ones, come back and build it again. So United Rentals may continue to acquire companies at this pace for many, many years, but it will never finish. The big question about United Rentals is, when are they going to do something similar in quite this dimension, at quite this speed outside the United States?
That's an interesting thought. So they have made some inroads. I've seen some acquisitions in Australia within the last year or so. Do you see that continuing? I mean, there's some big players in Australia, well-known names, potential for them, I would think. Do you think that's on the horizon?
Australia calls itself the lucky country. It's a rich country. Mining industry helps it a lot. So the equipment rental industry is prosperous. So that's a natural place for United Rentals to invest. United Rentals also does business in Europe, although in a smaller fashion, but they are still acquiring here too. The top rental companies in Europe, the big 3, Loxam, Bowles, Kilo 2, and Sunbelt, are actually less profitable than United Rentals is in the U.S. So I can see why it's more tempting to buy a Head and Enquist in the United States, where you've got all the synergy, and it's low risk. They're buying their neighbor rather than entering into another geography where they can't necessarily move equipment back and forth.
That's interesting. And that's something I heard at a recent trade show, is that the rates stateside are just so much higher than what are commanded in Europe. And so why is that? Is it because of market pressures and the competition, or is there something in the US market that means we can command a higher rate?
I think it's a combination of things. I think in the United States there is a little bit more inflation in construction labor, construction equipment. So that may be part of it. In very concentrated markets like the United Kingdom, very small geography, a lot of people on top of each other. There are a lot. It's very easy to get competitive offers. A lot of rental companies working in the same geography. So similar situation to France, Germany, and the other larger European countries, there's a lot of competition. There are 100 rental companies plus that you can rent a piece of construction equipment from just in London.
Interesting. So I guess in the US, we have a very large landmass. We largely have one language. Product is shipping east to west coast all the time. Does the same happen in Europe between the different countries in the European Union, or?
It does, although most of the rental companies there's not so many dominant rental companies in Europe that have a full catalog in each country. So Sunbelt, very concentrated on the United Kingdom with some presence elsewhere. Loxam, full catalog in some countries, in Scandinavia and France, partial catalog in the United Kingdom, and partial catalog in in Italy, for example. So it doesn't move. The equipment doesn't seem to move as quickly, although it can, because CE spec equipment will move in and out of different European countries. But I think in the United States, it may move faster, just as I think labor moves faster from state to state.
Absolutely does. Yep. Yeah, we see people moving around. They often stay within the industry, but they move between locations and between companies a lot. So that's interesting. Kevin.
Matthew Flannery, the CEO of United Rentals, came out with some statements in this press release as well. And it kind of gets to what you were saying before about not only do they want to serve their end users, their customers, but they also want to serve their shareholders. The quote is this, that we will use our well-honed integration playbook as we prepare the acquired branches to take full advantage of our systems and operational capabilities and gain from our employee and customer-centric culture. I look forward to welcoming our new team members upon the closing of the acquisition. When you hear that quote, what are you taking away from that?
Well, I think United Rentals can say that more credibly than most of the rental companies on the planet. They've got good systems. They have integrated 200 plus rental companies. They do it correctly. They put their stamp on everything. They do have excellent systems. I remember 10 years ago, one of the questions you would ask a good rental company to see how good its systems were are, do you have a barcode or a QR code on every piece of equipment? Do you scan it when it goes on the truck, scan it when it comes off, scan it when you pick up, and then scan it in and out of the workshop? United Rentals did that before any other big rental company, as far as I understand, and they've stayed ahead. They've got excellent apps that the salespeople use to quote prices, and they've got great pipeline. They've got a great IT system. I guess you need that if you've got thousands and thousands of branches and thousands of people in the sales force.
Yep. They've got the infrastructure and the process in place to fold a company like H&E in and make it as seamless as possible for everyone involved, which is also speaks to the conversations we're actually hearing around the industry of making things more efficient and also getting to saving money. And that's a return. I mean, obviously, those are the focuses of any business, but it's a return from, maybe last year a lot of the conversations were meeting our sustainability goals. Do you see similar things in the conversations you're hearing?
Absolutely. I think United's motivation for this is more financial than anything else, because the big question that I get asked usually on when United or anybody else acquires something big is, did they pay a big multiple? Was it expensive? Does it make sense? And in this case, and United is pretty good at disclosing information. They will say, here's what the EBITDA of the target company was. Here's the multiple we paid. Here are the synergies. So here's what we're going to save. It's much more open than almost every other acquisition because I guess United wants to show their investors that they're doing this transparently and it's repetitive. While if a private equity buys a rental company, the tendency is to hide everything they can, because then it'll make it easier to negotiate the next acquisition. And there's been a trend in that over the last 5-10 years that the even almost every acquisition has much more hidden in terms of numbers than they used to in the past.
So they've been doing this for so long, Jeff, that you have to believe that it's been successful and they have been able to return that actual rate of return to the shareholders that they've promised. You've opined in the past on what they've paid for some companies. In fact, I think you said once famously that they overpaid for something. How did that pan out in the long term?
No, I don't think I've ever said specifically that United Rentals is overpaid for anything. What I did say is, if it keeps growing at this rate, it was a good deal. So it's a little bit different. Now, because they're buying a company in North America, this is a bet on the United States economy. So provided the equipment rental industry, plus the industries that it serves, industry, construction, so many other things, events, a lot of these have some optimism. And to buy a rental company for several times its annual revenue, or almost 7 times EBITDA in this case, to make that make sense, you've got to depend on some growth. But the United Rentals continues to grow year on year. The stock market seems to reward it. It's the most valuable rental company in the history of rental companies. In fact, I think the market capitalization did pass $60 billion at one time. And remember, the entire rental industry in Europe is less than that. And United arguably used to be 15, now something like 17% of the market. So the numbers are extraordinary, and the optimism keeps the share price making United continue to look like a good investment with room to grow.
Absolutely. And they're obviously very successful with their reported earnings, incredible in the last year. So congratulations to them and what they're doing there with their leadership.
Yep. Now, this acquisition aside, United Rentals has been paying down some debt over the last years, despite the fact that it's been investing in incredible amounts of equipment and repurchasing its own shares. So it's become quite a cash generation machine. Now, if you go back to the original United Rentals, I think their original business plan was they bought 7 rental companies and put them together. And then they bought something like 100 in the year or two after that. So the idea that United would get up to the size where it's going to be doing $1 billion of revenue every month is compared to some of the lesser developed or the Europeans. These are some big numbers. But at 17% market share, there's still room to go, and there's a lot of the rest of the world.
Yep. So now, as we do with every episode, we end by answering some questions. And if you'd like to submit a question, you can always send us an email at leadingthecharge@POWR2.com. That's POWR, the number 2.com. As we've talked about, there is this refocus into efficiency and saving money, especially when it comes to temporary power, battery energy storage. So, Tim, question for you. Actually, I'm going to open it up to Jeff as well, if you have a thing. Top ways someone can reduce money by integrating a battery energy storage system into their power solution.
Yeah, that's a good question, and one that we get a lot. As you mentioned, the shift has been a little bit from sustainability to financial. As Jeff mentioned earlier, a lot of the drivers is financial. So what we see when people are running purely on a diesel generator on a job site, they'll be not running efficiently. That is to say, the generator is not running its most efficient load profile. And by adding energy storage, you are just using the energy that is required on the site that is stored in the battery. Then you turn the generator on just to recharge the battery. That means your generator runtime is a lot less. So your service intervals are a lot longer. You're burning a lot less fuel. So right there, you have savings on obviously fuel, servicing, and shift rental when the rental companies charge you for more than a single shift rental rate. So there's a lot of financial benefits. You obviously have to factor in the asset cost of the battery, but when you do the figures, the overall savings are there, and the total cost of ownership of your generator is going to be less because you're doing less servicing and maintenance and engine repairs and that type of thing. So Jeff, you've had a lot of experience in this. You can add to that.
Well, at different markets around the world, the economics are a little different. For very large market in the Middle East. Saudi Arabia just had a big increase in its diesel fuel price for construction sites and everybody else. So every time the diesel price goes up, then having the right size of generator working right in its sweet spot, the efficiency goes up. That's the equivalent is driving a 100-mile-an-hour capacity car through a very crowded city at 2 miles an hour all day long. The diesel engine just does not like working under a too light load. And as the emission control systems on these diesel engines, stage 5, tier 4 final in the US, as they really require the diesel engine to be working in its sweet spot with some load on it. So if it's too lightly loaded, makes all kinds of maintenance problems, there's fire hazards, there's all kinds of inefficiencies. If you can have your generator running in exactly its most efficient sweet spot, charging the generator, but half the time or a third of the time, the savings are immense.
That's fantastic. Jeff, can I just circle back to that fuel cost question in the Middle East? Because something we've always battled with a little bit is the incredibly low fuel costs in that region. So what's happening there to increase the diesel fuel costs?
Well, Saudi Arabia was always famous for it because it's a big producer, and as a benefit to its citizens, it gave out. Essentially, it was originally at cost, and then sometimes subsidized diesel fuel. But doing that has some perverse incentives. Just like Saudi Arabia used to have very cheap electricity because of the energy, you're encouraging inefficiency. The Saudi and all over the Middle East, where the electricity was too cheap. If somebody went on holiday for 2 weeks, they'd leave the air conditioner running at a very high rate so it's nice and cool when they come back. Now, with more expensive energy, you get an app, control it remotely, do it more efficiently. The efficiency is much, much more important. I live in the United Kingdom, which is a country with very expensive fuel. I better believe I bought a vehicle that has very good fuel economy exactly for that. So the economics of fuel are going to be one of the things that continue to drive. Certain applications on construction sites. One of the best ones is a tower crane. Most of the time it's working almost no load. Occasionally there's a big grunt as the tower crane lifts something up. There's one instant where you need a generator this big. The rest of the time, the generator you need is this big. So rather than having this one run inefficiently, the answer is get a smaller one perfectly in its sweet spot of efficiency, charging the battery. It's one of the most obvious quick wins in the battery system. Even if the battery is expensive, the fuel savings and the efficiency of the operation is absolutely massive.
Absolutely. Couldn't agree more. Thank you, Jeff. Really appreciate your time today.
Yes, thank you so much. And whatever platform you're on, hit the like button, hit the subscribe button, leave a review, do all of those good things. And if you want to learn more, we'll have links to everything in the show notes, links where you can find Jeff on LinkedIn, or you can just visit leadingthecharge.io. Our legal team wants me to say that any statements or views expressed by the hosts or guests on Leading the Charge are entirely their own and do not necessarily reflect the opinions or positions of POWR2, their partners or affiliates. And once again, Jeff, thank you so much. Appreciate you taking the time to talk with us today.
My pleasure. Thanks for having us.
Thank you.
Wonderful. And we know that your time is valuable as well, and we appreciate you spending even just a little bit of that time with us. So let's simplify sustainability and keep leading the charge toward a world powered by sustainable energy. See you next time.